Aspen is a rising star in the global pharmaceutical industry, supplying branded and generic pharmaceutical products in approximately 100 countries. It was founded in 1997 by Stephen Saad. It has a market cap of nearly 69 billion rand, a price to earnings ratio of 26 and a dividend yield of 0.7%. Now, when you look at Aspen Pharmacare's management, it's all about Stephen Saad, and for most people, it's a big tick.
Yeah, he's definitely one of South Africa's, kind of corporate stars. He started in this industry. He was an accountant. He did so well. He sold the Zurich pharma business back to its owners. Then he had a 2-year restraint of trade. So he went and started Varsity College, made 50 million rand, sold it to Advotech, went back into the industry once his trade restraint was over. Brilliant at the numbers, brilliant at the pharma, brilliant at the investor relations, brilliant at mergers and acquisitions, great at managing his team. I mean, he really has hardly put a foot wrong. And the company really, one of South Africa's real corporate success stories, as you say, 70 billion market cap from a standing start just over a decade ago. Incredible story. Corporate
success story, as Paul says. We've seen the stock rally about almost a 40% year to date.
Yeah, Aspen's a sad share for me.
Yeah.
I've been investing in the share for many years, and it's actually the first time it's got to the stage where I'm finding it quite difficult to stomach the valuation. I echo Paul's thoughts completely. Stephen Saad's a guy, you go and visit him, we keep our little notebooks as analysts and fund managers. And, he gives you a 3-year strategy. You go back in 3 years' time, that's what he's done. Now, it's one thing developing a strategy, but it's got to be implementable. And he's been phenomenal at that.
So it's all about growth for Aspen Pharmacare, Paul.
Yes, because if you look at the global pharma titans, you get people like GlaxoSmithKline, Johnson & Johnson, Pfizer, Novartis. They're all like $150 to $200 billion market cap. They all have excellent balance sheets and they pay good dividends, but they're seen as being a little bit constrained and people worry about their growth potential. Then you go down the ladder to a company like Aspen, which has got a $10 billion market cap, and everybody starts getting excited because they can see there's lots of open road there. Remember also, Aspen's got that relationship with GlaxoSmithKline. Andrew Duffy, who's the CEO there, was previously here in South Africa. He's a mate of Stephen's, and they took a stake in Aspen in exchange for the deal that Aspen then distributes Glaxo's local stuff here in Southern Africa. So there's a nice cozy deal there, and I think the market perceives that in time Glaxo is going to put more expired, in other words ex-patent drugs, into Aspen and do exciting things with them. So Aspen becomes their like stalking horse in the developing world, because for Glaxo it's better to have a stake in Aspen with a high market rating and excitement than it is to have these old things that are not getting them any credit.
Let's look at the share prices. So if you didn't get in at around the 2010 levels, it's currently sitting at 130.
Almost 150 in fact, 147, yeah.
So your thoughts on the share price, like you said a little earlier, it's a bit of a pain for you right now.
It's a company you want to own for the next 10 years. But on a 6-month view, I think it's too expensive.
So too expensive. Paul, would you be getting in right now?
Yeah, look, it's been a heck of a rally right up there. I think the earnings people are looking for this period now, because they've got financials out or soon to be out for the period to June, must be around sort of 7 rand. So to deliver 7 rand of earnings, it's a bit of a stretch. But one must remember that there are other drug companies in emerging markets that trade on similar sort of fairly elevated price to earnings ratios. Remember, the other thing that has been quite marked about Aspen is people have woken up to just how clever that Aspen Sigma deal was in Australia, because they paid like 7 billion rand or something for Sigma. People thought, oh my goodness, this is another South African company going to Australia, it's going to be a disaster. In fact, what has happened is that they stripped out almost all of the costs and they're distributing into Australia, and everything's so far going very well.
So hot or not on Aspen, Peter?
Right now, not.
So not hot, hot or not on Aspen, Paul?
No, I'm happy to keep buying them. We've been doing so. My sense just generally is that they are very high, but they're going to keep delivering it. Latin America is where Stephen's going next. So I don't normally worry too much about price to earnings ratios, because as long as they can continue to deliver the growth, the share price, the earnings, it'll grow into it. So I'm hot on this one still.